All right, y'all, back to work. A fantastic trading day today. Pretty much every trade we talked about in last night's video came into play at some point today. And it sounds like a lot of you guys made some pretty good profits as well today. So very happy to hear about that as well down in the comment section. Now, I got some more good news for tomorrow because anytime we see a big move after a news event, we had CPI that came out this morning. Anytime we see a news event and a big move going higher like this, there's always two types of trades, two types of setups I look for the following day. The first one, very easy to learn, very common. We'll talk about that in detail here tonight. But I'll tell you right now, though, if we're lucky, trade number two, it's a bit more advanced. But if we can hit trade number two tomorrow, it could be our biggest profit of the week, make our entire week, make our entire month of August. So I'm very excited for what should be a fantastic trading day on Wednesday morning. So enough of the intro, shall we? Charts are ready. Let's dive in and make some more money on what should be a fantastic Wednesday trading session. S&P SPY ready to go tonight. NASDAQ triple Qs are always ready, aren't they? I have three clues on these charts telling me where I think the money is made tomorrow. The first clue is right here on the hourly chart. I like to use the hourly chart as a directional filter. It's obvious to see right now the buyers are in full control. That's our first clue. Buy side is our directional filter for tomorrow. The second and third clues are down on some faster time frames, some tick charts. We're not going to trade time charts in our trade room because tick charts, they make pattern recognition a whole lot easier. There's no major news on the schedule for tomorrow, so we'll jump right in on the tick charts. And by the way, if you're watching for the first time right now, that is a 7,000 tick chart, upper left-hand corner, and you'll notice that moving average right there. That's a 21 EMA. It's the only indicator we need to make consistent, repeatable profits. There's two very important clues here right now on this tick chart. First clue is this big move going higher. Now, why is a big move an important clue? Well, I don't want to buy high. I want to buy low, right? I want to buy a nice deep pullback after I see a really big move in one direction. That's one clue. My favorite clue, though, for tomorrow is that trading range. Now, remind me again, folks, what happens after a range breakout? You got it, a breakout pullback. We saw a lot of good breakout pullbacks if you watched last night's video. Now, most important thing, though, is I said earlier, anytime we have a news event, that CPI this morning, and a big move after that news comes out, there's always two types of trades we look for the following day. Why don't we cover the basic one, the easiest one, first here on the S&P, and then we're going to dial this up a few more notches, a bit more advanced tactic later on the NASDAQ. And I'll tell you, like I said earlier, if we hit that second trade for tomorrow, it could be game over the entire week for the week here this week. So make sure you watch all the way to the end. Let's talk the first one here right now. The first one's very simple. I want to buy a nice, deep, two-legged pullback around that breakout pullback zone. Now you'll notice right now what I have in the charts here right now. I have a shallow pullback zone and more of a deeper pullback zone. And the reason why I do that tonight is because we have a lot of very positive, very bullish sentiment in the market right now. I would love to get a deep, deep pullback, but you know, the CPI report today, it showed us once again the experts are wrong about inflation, and it looks like we might have a rate cut coming in the month of September. So as much as I want to get a deep pullback right now, we may keep grinding higher here on the euphoria of that CPI number coming out below expectations here this morning. So how do I buy a shallow pullback right now? Now, a shallow pullback, what's my problem? Risk reward is the most important hurdle on a shallow pullback. So if all I get is a shallow pullback, I want to get in underneath prior swings. In the free video course in our trade room, this is a technical bear trap. It's a higher high in price and a move just below that low. Like we saw over here this morning, right? That higher high in price and getting in underneath that low. If you watched last night's video, it's one of the trades we talked about last night on the YouTube video. So shallow pullback, I need to buy as low as I possibly can, getting in underneath prior swings. The ideal pullback, though, is much deeper. I would love to see a nice, deep, two-legged pullback get down around that breakout pullback zone, get down around the low of that channel down there. That'd be ideal. Now here, I don't have to worry about a bad risk reward ratio. I can risk small and earn much larger on a deeper pullback. Because of that, I can be a lot more aggressive. On this one, I'm looking for what's called a 2-try bear trap. Now, I'm not gonna blindly buy this, right? Because I don't know how far this will pull back. It may pull back a bit deeper. I don't have a crystal ball. What I know though is that when this thing pulls back like that, it will feel like a reversal to inexperienced traders. So my favorite way to enter a trade like this is what I call a 2-try bear trap. It's bears once, higher high, bears twice. That way I know where their stops are. And if you get stopped out and you're caught short, you get stopped out, you buy your way out. So the goal here is a nice deep 2-legged pullback ideally, get into some key areas of support, trap some rookies in who are not watching my videos obviously, and buy right into those stop losses. Now in trades like this, we have all of this open space now because the market now wants to go back up and retest that high. Open space means I can add to my winner. In our trade room, we call these add-on trades. Now, add-on trades are very simple. First of all, there must be a deep pullback to free up plenty of space before we go back up and retest the high. Then we look for separation off the moving average. Let's go over here, right? Separation, separation, separation. Anytime we separate off the moving average, it means strength. So after I get that bear trap, I'll take that 1-to-1 first target, get rid of risk, look for that separation, followed by a higher high in price, and add to my position before we take out a retest of that high. It's a bear trap and an add-on for a retest of that high. Now, one thing I want to mention on these deep pullbacks. On the deep pullbacks, every once in a while, we don't get that add-on right here. We'll get our bear trap with our 1-to-1 target, but every once in a while, we end up holding above one of these prior swings and making another leg going lower. Now, I'm going to warn you on this. This will feel like a reversal, but remember this. We don't use tick charts for direction. We use the hourly chart for direction. And on a retest move like this, in other words, it makes a run down, it pops up and retest. These are a gift to the buyers out there because this will feel very bearish. Now, the formula on this, think about this as a 2-legged pullback. 1 leg, 2 leg, that's our money zone right there. Underneath that low, and think about that 2-legged move, that ABCD, that's our money zone right there. This is where we look for another bear trap. The same exact pattern for the most part. Once it makes that run lower here, I'm gonna wait for that pullback to that moving average, trap those bears in once again, try using that 2-try bear trap, squeeze those stops, and again, we know the market wants to go back, take the high out up there, separation, off that moving average, that higher high in price, and I'm adding to my winner from there. So remember, the tick charts are for entries. The higher time frame hourly is for direction. Do not let a retest trade fool you. These are oftentimes our biggest winners in our trade room. Now, I want to talk about that second strategy on the NASDAQ in 2 seconds. Before we do that though, let's slow down for 2 moments because I know a lot of you folks watching right now, you guys know these patterns already. You're making money with these already. But if you're here for the first time right now, this could be a brand new language I'm speaking, a brand new strategy. What are bear traps? How do we add to our winners? Don't you worry though, I teach this entire roadmap, the entire system in my free trading courses. In fact, I have a ton of examples of all these entry patterns, all taught in a lot more detail in our free video classes. What I'll do is I'll put a link up top here for you, upper right-hand corner, hit that link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. It is remarkably simple. You'll laugh when you see how simple that technique is. More importantly though, let's face it, we make our money by timing good entries. So in that video class, I want to teach you my 4 favorite entry setups so you can time better entries, get your confidence and your P&L back in the green again. Guys, bottom line, if you're still missing the best entries each day, if you've lost your confidence in your current strategy, hit that link that popped up there. Watch that free trading course. You're going to love all the trade examples I include in that short video series. The best part is it's completely free for you. Also be aware too, guys, I'll drop all the important links below the video in the description of the YouTube video. Start first on that free video course. Most folks start making money all on their own, all from that free video class. I'll drop that link below. We trade together every day in our trade room. I'll put that info link below. And as always, don't forget, I post a ton of charts and videos and mindset stuff on Twitter, or X as the kids call it these days. If you're on the next platform during the day, give me a follow. Again, all the details you'll need to learn the strategy, get your confidence back, time better entries. I'll put all those links below the video tonight in the description. Okay, so now you know, if you're watching for the first time right now you know where to go and get more information to learn more details about this strategy. Where we leave off on this, I talked about how there are two setups I'm watching for tomorrow. The first one is that nice deep pullback, right? The second one we'll cover on the NASDAQ in a moment. Let's cover one more variation of this right now. I talked about the shallow pullback, how that's a bit more difficult. I got to buy that technical trap. I talked about that two-tried bear trap down here and that squeeze back up again, along with that retest trade, which is always one of our favorites in our trade room. But here's a question though. What if we don't get that bear trap down there? You know, every once in a while, we'll get that nice deep pullback and just goes whoop and runs right back up again. Sometimes we can't trap those bears in. Not ideal, but you know me, right? I don't have a crystal ball for tomorrow. I can only take what the market gives me. So if I get that deep pullback and I don't get that bear trap down there and it bounces hard off of that low, remember, I don't want to buy high. If it bounces hard off that low, I want to start thinking about buying under prior swings. And most of the time, I'll find a channel off the highs, down off that low. I want to get that first test off the low of that channel. In my trade room, we always say first test is the best test. So just like on a shallow pullback, I want to buy underneath a prior swing, right? That way my risk reward ratio is good in my favor. A deep pullback that bounces up nice and high, it is pretty much the same problem. I don't want to buy high, I want to buy low because I don't want to risk large to earn small, right? I want the opposite of that. What I'll do is mark those lows, find that new channel, and grab that first test is the best test off of that low. That way, my risk can be managed. My reward is much larger. That's the way you manage those bounces up, preserving that good risk reward ratio. Remember, the better the risk reward is, the more people will participate on that trade, and the more folks participating, the better odds of success. We call those V-bottom trades in our trade room, and it's a bit more advanced variation of that trade setup number one. All right, let's now talk about that trade setup number two, because the second one for tomorrow, it's a bit more advanced, but again, if we hit it right though, it can make our entire week, maybe our entire month of August. Over the NASDAQ here right now, and again, we'll start first on the hourly chart. We know we're bullish overall right now. Do not overcomplicate this. It's very easy to overthink this stuff right now. We are bullish overall. That's our directional bias. Before I drill down though, the tick charts, and talk about that second trade for tomorrow though, if you're enjoying this video tonight, please help me grow this channel, will you? By hitting that like button and make sure you subscribe. I know we're all busy people these days. I appreciate you all tuning in and watching my videos. So as always, guys, thank you so much for the likes, subscribes, all the love I get in the comment section below. Now, I promise I'm done begging for likes and subs here. Let's now dive in and talk about those tick charts here. On the NASDAQ, you'll notice right away here, it's a 4,000 tick chart. Different markets, different personalities, different tick chart values. We'll talk about that more in the free video course. On the tick charts, you'll notice two of the same clues right now. One clue, big move up. Big move up says buy a nice deep pullback. And of course, that range right there, that beautiful trading range here. And again, that gorgeous breakout pullback. If you watched last night's video, we talked about pop up, two-legged pullback, the pop and pullback, the breakout pullback. Again, pretty much every trade we talked about last night came into play at some point during the day today. That was fantastic this morning in the morning trade room. And again, that range right there, we know just at the S&P, we see a breakout. I want to see a breakout pullback off that range. And of course, I have that channel off the highs, off that low as well. And very much like I talked about earlier on the S&P here, if I see a shallow pullback, my problem is what? It's risk reward ratio. So bears once, higher high, bears twice, get in underneath that swing, right? Underneath swings is the key when I'm buying a relatively shallow pullback. A deeper pullback is by far more desirable because again, now I can trap bears in and I can use their stops to squeeze this thing back up and retest the high. And I covered some variations of that earlier on this video. The same thing applies here now to the NASDAQ. Let's talk about that second game plan, though, second strategy, the second trade for tomorrow. And it's always going to be a trading range. Now, ranges are by far my favorite scenario for tomorrow because once you learn how ranges work, you'll see they'll be a lot more lucrative than simply a deep two-legged pullback. For example, what do ranges do? They love to rotate, right? We use things like pendulum swings and triangles. We go up, down, up, down. Ranges love to rotate. And again, we measure the amount above, the amount below. We use triangles or megaphones and we trade that rotation. So if we understand that ranges love to rotate, and we know that there's a range right below us as well, that breakout pullback zone down below as well. Now think about this. There's a few ways we can trade this. The easy way to do it is wait for a breakout below it, get down into that breakout pullback zone. Now again, I'm not going to pick a bottom on this, right? I don't know how far that will go. What I do know though is this is a horrible spot to be selling, isn't it? You would never want to sell that move going lower because that range above us wants to rotate going higher again. It's also right into that key support level on that breakout pullback. Now, remember that bear trap I mentioned earlier? Same thing here. Wait for the pullback to the moving average. Let the bears try once, try twice, higher high in price, trap those bears in. Now remind me again, where does the market want to go now? It wants to rotate. This is why ranges can make our entire week because we're not going back to the retest the high right now, right? We will, but now this thing's got a lot more juice now to make that run all the way to that pendulum swing on the side of that range. This is why I love range markets. And remember, that bear trap is only the beginning. Now, as it pops up and starts rotating higher now look for that separation off that moving average, that higher high in price. And this is that add-on, that bear trap into that add-on pattern I mentioned earlier on the S&P. Bear trap, add-on, and whatever you do, leave a runner. If there's one scenario where you must leave a runner, it's always a range rotation. Now, keep in mind too, the same variation we mentioned earlier on the S&P also apply. For example, we may only get that 1-to-1 first target, and we may see another leg running lower. And again, this will feel like a reversal, but don't forget the higher time frame on the hourly chart. Remember, breakout leg, measuring leg. Remember the money zone. Underneath that low, find the measured move going lower. That's our money zone right there. Horrible spot to be a seller, great spot to be a bear trapper. Let that moving average come down. Let those bears chase it lower. Rookies will not learn this lesson until they pay the price for it, right? Everyone has to pay their tuition to these markets. This is where rookies learn that lesson. One try, two try, trap them in, run this thing back higher again, squeeze those stops, get that separation off that moving average, rinse and repeat, right? Rinse and repeat. Bear trap into add-on, the amount below, the amount above, and we leave our profit targets for that runner. Now, one more thing here, one more thing. This is the most difficult one out of all of them, so make sure you pay attention. It can also be the most lucrative out of all of them. Let's say now we go sideways overnight into tomorrow morning, but now we don't go lower first. Now we go higher first. What do ranges do? They love to pendulum swing. They love to rotate. So now here's a question. How would I sell something like this? Well, up here, remember, first of all, there's a counter trend trade, which means it's always going to be half size position, quarter size position. If you're not making money consistently going with the trend, it's a zero size position for someone like you. We call these crown reversal patterns off the high. It's basically a bull trap. Buyers trying once, lower low, buyers trying twice. Very important. Watch how this pattern lays out. Lower low in price, above that high, and a strong red candle closing firmly now back below that moving average. This trade right here is not for everybody. It's not for everybody. Again, if you're not consistently profitable going with the trend, I would personally avoid that trade because it is only a 35-40% winner. So half size trade, quarter size trade. When it hits though, it's a big time winner because again, above the highs, below the lows. Now, this is where that voice in your head will say this feels like a reversal, but it's not a reversal. Again, this is the tick chart, and not to mention, this is nothing more than a range rotation. We have to learn how range rotations work on this. This will feel like a reversal. It'll feel like a good spot to be a seller. It's not a good spot to be a seller. It's a great place to be a bear trapper. Wait for a pullback. Now on this one, again, we're going with the overall bullish trend. I don't need to be as careful buying below the low as I do to be selling off the high like that, right? To short off the high, it's a lower percentage trade, that crown reversal pattern off the high. This one's a very high percentage trade. The hardest part about this one is our psychology, right? Our emotions. It will feel like you're doing something wrong on this. But again, that is why we don't pick the bottom. That's why I'm not blindly buying it. I'm going to wait for it to pull back, bears once, higher high, bears twice, squeeze those stops. Think about where would those sellers be in pain and buy right into those stop losses. And these oftentimes, they will just rip and run right back all the way, other side of that range for an easy runner back and forth. Buying low, selling high, trading that rotation. And again, beware of that fake out breakout off the high. Don't be caught chasing a big move. It's a big move up already. So not a great spot for a breakout pullback above a range up there. I would much rather short this thing, small size, of course, bull trap, crown reversal. The easier one though is down here, right? Let it roll over, let it trap the bears in and squeeze those stops back up again. Right, guys? Boy, I'm getting excited just talking about this stuff right now. I'm getting goosebumps for tomorrow. Should be a fantastic day tomorrow in our trade room. But that's our game plan for Wednesday morning. Now, speaking of Wednesday morning, guys, the place to be in the trade room, 8 o'clock Eastern time, the easiest way, start making money in these markets, come out, learn and trade along every morning at the opening bell. As always, I'll put all the important links you need below the video in the description of the YouTube video. Start first with that free video class. You're going to love all those trade examples. Then come join me in the trade room and we'll do it all together. In the meantime, folks, be well out there. Be nice to each other, will ya? And you better be here tomorrow night. Adios, amigos. Bye for now.